Singapore's core inflation rose to 1.2% in October, up from 0.4% the month before. The sharpest increase this year surprised some analysts as services and food costs led the rise. Headline inflation also picked up to 1.2% from 0.7%. Analysts say tourism-related inflation will likely pick up toward year-end, but should remain broadly stable heading into next year. Caitlin Ng with this report.
The drivers behind October's uptick in core inflation include higher healthcare and recreational costs. More expensive COE premiums also contributed to the jump in headline inflation, which accounts for accommodation and private transport. Some analysts say October's core inflation was slightly above expectations.
What stood out for us was the uptick in the services inflation. So I think that was perhaps attributed to some rising healthcare inflation, and I think some of the travel-related numbers also headed higher. This could be a one-off step up, which would mean that we will not see inflationary numbers deviate too much from current levels.
Mr. Ng is keeping an eye on services inflation, as it may signal lingering price pressures. Food inflation may also continue rising, causing some potential increases in overall inflation. But some market watchers say there's no cause for concern.
The higher inflation is actually led primarily from where we see demand conditions, whereby both external and domestic demand conditions have a part to play in lifting prices in the latest print. Whereas the supply-driven inflation, especially externally driven commodity prices, have been very tame. And really from an academic perspective, if we see inflation to be led by demand conditions, this is something to be celebrated rather than to be worried about.
For next year, Singapore's headline inflation is expected to average between 0.5 and 1.5%. But authorities warn that this outlook is subject to uncertainties.
I think that risk remains to be on the table. And these are the risks that has been cited: geopolitical tensions, tariff, external trade, are all very realistic risks that could play a part in how growth and inflation will trend into 2026.
Still, analysts are watching two trends that could support growth and help soften inflation. These are the potential cutting of interest rates by the US Federal Reserve and the easing of tariff risks, with the US extending exemptions across ASEAN.